Welcome everyone to the Moneycontrol live stream. You are watching Markets with Santo and CJ, a place where we bring the old school and the new school to bring you a humorous yet informative take on the markets. By the way, I am Chiranjeevi, but you can call me CJ, and with me is Santo.
Hi, I'm Santosh Nair, and much as TJ would like to talk about the so-called new school of investing, trust me, there's nothing like new school or old school when it comes to investing. There are just a set of rules that have not really changed over the years. And CJ and I will be debating that on this show at 9 a.m. and 3 p.m. on weekdays.
That we will, but I'm pretty sure there are millions of new retail investors out there who are rewriting the game would like to differ to your
Well, we'll
conclusion.
soon see to that, CJ. So, looks like your yellow t-shirt didn't do much for the markets and far from sunny, I would
It
say.
did not.
But how was the day otherwise?
Well, my day was great, just thanks to the missile power that I had a little while ago. But markets day was not pretty at all. But we'll get to that. We'll dissect the day's action and reaction for you. But this is what we have on the show today. Dalal Street is a sea of red as surging bond yields are spooking investors like nothing before. We'll also have, Santo and my stock takes on the various movers out there in the market that caught our attention. And lastly, we'll be looking at the Nifty options activity to give you a clue on where the market is headed next. That said, now get back to the market. So Santo, pretty bad day, man. Pretty bad day on Dalal Street. Bourses, investors and traders both had a bad day, except I believe except for those bears who were shouting from the top of their roof the last week, that the market is going to turn for the worse sooner rather than later.
Are you trying to indicate something, hint at that I am among one of those?
No, I am not indicating anything. I am not indicating
CJ,
anything.
if
You yourself.
If you had been reading the signals carefully, rising bond yields, rising inflation, it would have been pretty much obvious what the market
Yeah,
was going to do.
I believe yesterday you said investors were underappreciating the inflation concerns. So maybe they've just taken cue from you. That said, all sectors, on the NSE were in the red. I mean, we have seen that after a very long time. And Santo, the sea of hope that mid-cap and small caps were yesterday and even last week, even that has dissipated today. I mean, the Nifty mid-cap index was down about 1.7% just before we went live. The small cap index about that same region. So not looking very good. And
Well, see, just one point here that, again, it was very obvious. When the larger indices are struggling for direction, second line stocks cannot just keep rising one way. That's the other lesson.
Yeah, but we have also had an outperformance. So it's just maybe just investors, spooked investors just taking some profit out of those mid cap and small cap names that did so well when large caps were not doing anything.
Okay.
Yeah,
profit
but
taking,
looking at, if you look at the internals of this market and if you look at the broad-based nature of the selling, I can't, help but reminded of the statement made by Michael Gayard of ATAC Mutual Fund, who recently tweeted the statement, and I quote, "In all seriousness, this is perhaps the most disturbing investing environment anyone has ever seen. It is worse than 2008 and 2020. And that is a big statement to make from a veteran investor like him.
I think if you really believe in that quote, then here's the bad news. It looks like the correction may not even begun because indices are not very far from their record highs. And if he's saying that things could get worse than 2008 and 2020, then probably we've got a very, very long way.
But have some hope, Santo. Have some hope. Let's not get driven.
I'll try to learn from you, but for now it
market.
is inflation and rising rates. And now the other thing is the earnings season has got underway.
Yes,
and
definitely.
While analysts have not said that openly so far, but as earnings continue to trickle in, we could see a wave of downgrades setting in, and that probably can affect sentiment further. But here's the good news for you, CJ. You shouldn't be too worried about market falling so sharply.
Okay.
Because it's only when prices fall do you get a good opportunity. The general perception that all this new investors or the new school of investing, you read the papers, you see that okay, Sensex is at a new high, okay, this is the time to be investing. That's not the way it works. When markets are down, that is ideally the time you should be building your portfolio. So you don't have to really take it to heart. You look at it as an opportunity. And possibly that when the Q4 earnings come, the trend is likely to get very selective here. But when you see opportunities, probably the companies with good earnings visibility and positive commentary, I think that is when you should be looking to add to your portfolio.
You call that cheering up, Santo?
Yes, of
I
course.
mean, I want to make money, or investors out there want to make money so that, they can become financially independent as soon as possible, not that so that they can make money for their retirement home, Santo.
Yes, but there is a
Nobody
way.
has, no, in the long run, as they say, everybody is dead. We can't be waiting for the long run to come around the corner all the time.
But there's a way to making money, and you'll soon realize that.
Anyway, I'm glad that our dour market update is over with, and we can dive into the segment that both you and I love the most, our stock takes. So what do you have?
So, starting with Balkrishna Industries, the stock managed to hold ground in a weak market today, was flattish, and on the whole for the year, the stock has still been in the positive territory.
Okay.
So, Kotak Securities has come out with a report on Balkrishna Industries recently, and it says that volumes for the March quarter are expected to be very strong, and also the average selling price for its products are likely to be high. There's good demand, especially in the agricultural replacement market.
Okay.
So you could see some good numbers, positive numbers from Balkrishna Industries.
But isn't the company's main, revenue source the auto ancillary part, wherein they provide, supply tires and all to the
Exactly.
auto
Agriculture replacement, I meant tires.
manufacturers. Yeah, but automobile demand, I would think that automobile demand in the current market is quite bad. I mean, and given that that would largely dominate,
So
their
Balkrishna
revenues,
Industries
it
operates
doesn't
in a
look like
slightly
it
niche
doesn't look.
segment.
Yeah, but it seems like you're looking for a cause for optimism where there are none at this point of time,
Shouldn't
especially
you?
in the automobile market.
I'm not looking for optimism. I'm looking for opportunities rather, or pointing out to
Doesn't
opportunities.
seem like much of an opportunity
There's
to
PI
me.
Industries. Now, JM Financial had come out with a report recently saying that the overall outlook on the agrochemical business is quite positive. It has also said that the CSM molecule, that is the crop system model molecules business of the company, provides room for plenty of upsides. It is positive on the stock and has put a buy rating on it with a price target of about 3,460. The third stock is Ambuja Cements, which is managing to hold on even in this weak market. Last 2 days, it's seen some good volumes. It's been rising one way for about 5 sessions now.
Yes. Very good run.
It's hard to say whether this purely based on the positive outlook for the cement sector, or is it something else that is driving. We are hearing plenty of speculation about what could be possibly driving.
If I am not wrong, weren't you very, cautious about this entire cement space
I
riding
still
the
am.
high,
I'm just drawing your attention to the fact that the stock is still rising despite the overall
probably,
environment not being good for cement
and as they
companies.
say, the proof of the pie is in the pudding, and maybe the price is telling you that investors are actually very confident that the volumes in the cement sectors are going to hold through, even if, and just today morning, reports have come out in the paper that price hikes are going to come even more going ahead from cement companies, because it's very natural. If cement companies are very confident about volumes, they will be confident that they can pass on these price increases to the consumer and still sustain those volumes because demand is strong. So yeah. Anyway, that's
M&M Financial is the fourth stock to keep an eye out for.
Oh, interesting pick.
Yeah, it was so far, I think, the underperformer within the NBFC pack, and after a US brokerage firm came out with a buy recommendation on the stock, it seems like there is pretty much good interest in M&M Financial. It has risen close to about 35% over the last 1 month. There's also the feeling that the company's asset quality is slowly improving. So that
is this a value pick or a momentum pick for you?
This looks, I mean, whichever way you look at it, but it looks like a value pick for now before it enters into the momentum territory.
Yeah, when we take over, basically.
Yeah. So this stock also has been one of the outperformers in today's falling market.
Yeah. So I have 5 stocks for you on my radar right now, and the first one I want to talk about is Paytm. What a statement day from the stock. This stock has been battered, bruised, made fun of. It's taken over ITC as the meme stock, and today the stock is actually up 1% in a market where almost there is no cause for optimism. Paytm is actually hanging on and is up 1%.
Probably there aren't any more sellers left. All those who wanted to sell
Probably. And I spoke about it in the morning, how there is possibility that some smart investors may have started accumulating the shares over the past few weeks. And I told you that we have seen about a 31% sort of a move from the lows of the record lows that the stock created in March. And I mean, if you look at the delivery data, Santo, the delivery volumes were 10% or 10 percentage point higher than the 20-day average, which tells me, one thing, that a lot of diamond hands have entered the room, and Paytm could be in for a solid move here now.
I look at it the other way around. I think that a lot of people who have already burnt their fingers buying the stock at higher levels are now trying to average their positions in the hope that maybe the stock has tested bottom. If it has, well, I don't know.
Yeah. Motherson Sumi. So shares were down 2% today, even though what seems like a very positive news came in from media reports that the company is looking to, do another acquisition in Italy this time around. The company in question that Motherson Group is looking to acquire is Marelli, if I'm not wrong, if I pronounced it right. And this company is an auto component manufacturer based out in Italy. It had sales of about $11 billion in 2021. So, and that too, basically a COVID year. So this is no small fish that, Motherson is trying to grab. It is a fish that is as big as Motherson. And so far, it seems that the market is a little apprehensive that Motherson is going after such a big fish, in the auto components space. But let's remember what Motherson is trying to do here. Motherson has a target of having a $35 billion turnover by 2026. Okay, and in order to do that, they are going by their tried and tested method of acquiring targets as much as possible, especially those targets which are distressed. And Marelli is one of those distressed assets out there in the global market. And if you'll go by what analysts are saying, Motherson has a reputation of turning around companies that it tends to acquire.
How many companies has it acquired?
I think it has acquired so far about 20, 28, 29 companies. Wow. So yeah, and I mean, it's grown its turnover from 1 billion to almost close to 10, 11
Sounds
billion.
Sounds more like an M&A specialist.
It is, in a way. It reminds me of that, of Richard Gere in Pretty Woman. You remember he was an M&A specialist who used to buy companies and then turn them around and sell them off. Although there's no selling here, it's just prosperity for investors and shareholders. But yeah, it is possible that the sentiment on Motherson Sumi could turn around if we do not take into account the sell-off that we are seeing in the general market today as well.
I think in a bearish market, even the best of news gets discounted.
Absolutely,
and the way investors or the market is looking at this possible acquisition at this point is that, in the short term, it could lead to cash outflows and a bloated balance sheet.
Aditya Birla Capital, okay, down and out at the morning session, totally down and out with the rest of the market, but it made a swift recovery after company came out with this quarterly update for the March quarter. Basically, loans grew about 13%. Their gross disbursements grew about 45% in the NBFC, business. And the most important thing that I noticed was that even the asset quality in the lending business improved. I mean, the stage 3 loans that they have came down to about 2% of the entire loan book, from around 2.2% in the previous quarter. So which is a very good sign. I mean, if you're looking at a growth story in the NBFC space where there are not many at this point of time to come, in that sense.
It's interesting. I think improving asset quality is also, I think, one of the factors which have been driving action in banking and financial services shares over the last month.
But critically, growth is also coming here. I mean, you have listening to our analysts, talk about when credit growth or loan growth comes back for lenders, we will see another spell of stock performance, but that is surely showing in
another set of momentum bias, but
anyway. My fourth stock or the secular stock is Tata Motors. Tata Motors was out about 3%, down about 3% in today's session, largely because investors are getting a little jittery about the JLR subsidiary, basically.
Shouldn't they?
They should. Why not? They should, because of China. So JLR has a humongous exposure to Chinese market. It gets about 30 to 35% of its sales from the Chinese market. And right now in China, we are going through a sharp slowdown, largely because of the lockdowns that the government is implementing there, because of a recent outbreak of Omicron cases that has seen, cities like Shanghai completely locked down till probably the end of this month. And that means demand destruction. And that is not good news for JLR. Lastly, I would like to talk about PVR. What a show. What a show. This is like a momentum trader's dream, this stock is right now. I mean, if stock market was cricket, this stock would be Josh Butler right now.
Okay.
And the stock was up about 2.5%, 3% by the time we went live. And why not? Look at the pre-bookings that we are seeing for KGF Chapter 2, 21 crores in advance bookings. Triple R, I mean, it's been a blockbuster movie. You would have heard about it. It's still making record-breaking box office collections. So it seems like there is a humongous demand out there for people to go and watch movies, and the slate for upcoming movies also looks quite good.
I think the announcement that PVR had made last month about planning to acquire Inox Cinema in an all stock transaction, that could also be one of the factors driving.
Absolutely, that is of course a longer term trajectory. But if you look at the near term from a an April quarter, June quarter earnings perspective, it seems like these numbers should build more confidence of investors that okay, that talk about OTT or over the top networks like Netflix and Amazons of the world taking away or eating away all these consumers from multiplex theaters, and who will go back to theaters to watch a movie?
What is your own take, CJ? I'm just curious to know, is the threat for real that people say that the public won't be going to theaters because you have almost it's very turning out to be expensive, and B, you're getting all the movies, not having to step out of your home.
Santo, last weekend I went to the mall nearby my house, and I can tell you the theater zone at least was full of people and full of footfalls. So I mean, anecdotally speaking, it looks pretty good. I don't think OTTs have taken over in that sense. So yeah, I mean, that is from on the stock part.
So it's time now for my favorite section, which is called In Case You Missed It. So CJ, what is it that probably I've missed out here?
So I want to turn your attention to the options activity that is happening in the Nifty options chain, basically. If you look at the option chain, the 17,700 call option of the Nifty 50 Santo was very active today. So
well, that sounds like Greek and Latin to me. Can you just break it down into a language which I can understand?
Yes. So a call option is basically what? If I tell you that tomorrow I will give you an option, but not an obligation, just an option that you can buy this A stock from me at a predetermined price and a time at a future date. So that is what it is. I'm giving you just an option, not an obligation. So you can exercise it or you cannot exercise it. That is you can exercise it when the spot price is higher than the call option price. Then it's beneficial for you to exercise it. But when it is lower, it probably is not. So that is what the call option is. And interestingly, in the 17,700 call option, there was a lot of selling today. I mean, traders were basically just writing the call option one after another. You had basically the open interest go up by what? 189%, around 189%, and the premium plummeted by 55%. Premium is the price that you pay to buy a call option or a put option. So that plummeted 55%. And that tells me one thing, that this market is not confident about a bounce back anytime soon. And by the way, these are not call options that are going to expire, tomorrow, that is Wednesday. These are call options that are going to expire next Thursday.
So as I take it, you're interpreting it in this way, it's the smarter people who are writing call options.
Yes,
they are writing call options because they're confident that the market will not go
that is a signal that at least the smart money is giving us. That
How do you know it is a smart money, CJ?
Because of course, these are the guys who can take the maximum risk. And when you are writing a call or you're selling a call, your downside is maximum, whereas your upside is only the premium that you
There are plenty of instances of even smart options writers having lost their shirts when the prices move on.
They are always aberrations, Santo, but you cannot generalize them. So yeah, that is on the call option side, and as I said, it probably hints at lack of a bounce back in this market after the sell-off that we have seen today. But if you turn the picture and you turn the table and you look at the put option, the 17,000 put option was very, very active today in the market. The volumes were very high. Now, when will you buy a put option? You will buy a put option when you expect the stock to fall more, so that you can buy it at a better price, right? So that is the option that you have when you have a put option, not an obligation. Now, it seems a lot of the retail guys were selling the 17,000 put option, which indicates to me that this market right now is a little bit more bearish than people give it credit for. This is a bearish market, even though you were making fun of it yesterday that this market is not understanding. what is happening globally on the inflation front, on the bond yield front, but it seems like market is taking cognizance.
Looking at it the other way, uh, overall, most brokers, traders, investors I spoke to were saying the same thing, that this is a range bound market. It's not going to sustain above 18,000. The Nifty will struggle to sustain above 18,000, and on the downside, it's unlikely to go below 17,000. So this is the range in which continuously there. But you yourself, quoted some big mutual fund names saying that this is even dire and worse than
ATAC mutual fund, yeah,
ATAC
Michael
mutual
Cadd.
fund. So I think probably the
interesting
option
that you mentioned that range bound thing, because a lot of the technical analysts I also spoke to, their thought process was that in a range bound market where the Nifty is not moving too much, we could actually see a lot of outperformance from the mid cap and small cap space, and hence my surprise, in the opening segment, my surprise that even the mid cap and the small cap stocks saw a lot of selling. So that tells me that this was just you sell right now. You don't think about what is going to happen tomorrow, what is going to happen later today, right now, because see, we have to remember, and we will address that in our next section, that you will lead us into, and that is on the horizon.
A quick update on the market in the meantime. The selling pressure is intensifying. The Sensex is now down by more than 400 points. It was down about 200 points a short while back. It had been moving in a range, and I think in the last 10 odd minutes you saw the selling pressure.
Yeah, and it seems like the IT sector is one of the culprits right now.
Yeah. And there's a lot of action going on in Nifty Bank as well. In fact, that's we are seeing a lot of buying interest out there. That's very surprising.
It's one of the sectors which is outperforming. Although it's still lower, but it's still outperforming. But of course, IT, metal, and real estate seems like the sectors that are really dragging the market at this point in time as we head towards the close now. Anyway, Santo, what are you going to be watching out for? That critical thing that you're going to watch out for that we should address next day, tomorrow in the morning?
I think two key things which the market will be focused on. One is Infosys results. The second one is consumer inflation numbers for the month of March. Now, when it comes to Infosys, I don't think there's going to be a big negative surprise in terms of its quarterly numbers. But like we saw in the case of TCS, probably the market has already priced in, the maximum upside.
Probably.
Yeah. So even unless they give a very great guidance, which I mean, it could go either ways.
But Santo, Infosys has a tendency to surprise the market sometimes. I mean, I remember, if I'm not wrong, last quarter also, we had this similar sort of a situation when investors were not so, enthusiastic after TCS's earnings, and then, of course, the rest of the IT pack was painted in the same brush, and then Infosys came out with big blockbuster earnings, and we had seen a good movement on the stock. So yeah, I mean, I would not still count it out a surprise package for Infosys management tomorrow.
So the challenges for the sector remain, which is mainly high attrition rate. They are struggling to get good talent, and secondly, you have a possible slowdown in the EU, which is now accounting for a fairly sizable chunk of IT companies' revenue. So those are the two.
And on the inflation bit, you think this print would be more critical, or do you think the April print will be more critical on deciding how the RBI goes forward?
See, the next rate hike by the RBI, if at all, it's likely only in a couple of months from now. So to that end, there is some time in terms of a possible rate hike. So. But clearly, if inflation continues to rise, it is going to unnerve the market for sure.
Let me stop you there, Santo. One last thing that I want to, would want you to take a look out for is the US CPI inflation data. That is going to come out around 6 p.m. today.
Extraordinarily elevated is the term which
that White House utilized. And I'll tell you, economists are actually expecting about a 7.9% print for the March inflation, which in itself, I mean, it's a multi-decade high number. They have not seen this sort of inflation since the 1980s, since the Paul Volcker day when he was the US Federal Reserve Chairman. So yeah, I mean, market could be, and probably that is what is explaining the nervousness even in our market, with such a big number coming out and everything. A lot of the Fed's reaction, what Fed will do in the upcoming meetings could depend on this, and maybe that is something that will be one data point that we will really watch out for.
I think it will play out something like this. Inflation number will be very high. Markets will, US markets will sell off, and your momentum brothers will watch it and probably hammer stocks back home too.
Yeah, but we'll make money either way. We'll make money
Let's
either
see.
way. Anyway, with that, we'll let you get back to your trading, and we will see you tomorrow morning 9 a.m. sharp on the Moneycontrol live stream For all your feedbacks, please post in the comment section below and follow or tag along in the hashtags that are on your screen below. And yeah,
well,
stay tuned to
moneycontrol.com for more updates.
Yes.
And have a nice day.
Have a nice day. Thank you so much for joining in.